There's always downside risk. And I've said this before, but I think it's especially true right now that, especially in silver, downside risk is very small relative to the upside potential over the next few quarters. The next support level, we lost key support at $21, $21.41 to be exact. So we dropped below that. The next support is at 1970, and then below there you've got support between around 1850. So I see that as most likely a worst case scenario. I'm not predicting that we fall back that far, but that's the downside risk, which is only a couple dollars. But I still think $40, $50 silver is coming in the next let's call it year or so, if not sooner.
And for silver in particular, why do you think that it can only fall a couple dollars when, a couple of years ago, we did see it fall all the way to around $11?
Yep. So a couple of things there. That is certainly possible if you get some kind of really quick spike low. But I think it was like March 16th, 2020 was that COVID spike low you talk about when we went down to $11. And that was the paper price. But you couldn't really get physical metal for that cheap. Maybe physical fell to $16, $17 or so, something like that. And that was very, very short-lived. That lasted a few days. So something like that is always an outside possibility as well. But I just can't see price staying below 1850 or so for more than a very, very brief period of time. The all-in sustaining cost for most of these mining companies is around $18, $19, and those input costs are rising with the price of diesel and fuel going up as well. So it's hard for a commodity like silver to stay below its cost of production for more than just a very, very brief period of time.
It is interesting because typically when we do see those spike lows, the premiums rise quite a bit. I have heard of people picking up silver around $14 on that spike low, which is, I think, a pretty good deal. But yeah, I mean, Eagles, I think I heard, were maybe upwards of $20. So it does seem like when we do see those spike lows, premiums do increase.
Yeah, exactly. When you're in an environment like this, if you're waiting for a further dip to buy physical, often, any drop in the paper price of silver is offset by an equal rise in the premiums. So, it's hard to get silver for less than $20 for actually to get it, physical silver in your hand that you can touch.
Now, as for gold, what are you seeing there?
Yeah, gold has held. It's been more resilient than silver. It did lose support at its 200-day moving average. But I've been saying from the beginning, I think you and I spoke when gold was up at 2078 on March 8th with that war premium at its peak, that, we're expecting a pullback. I wasn't expecting quite this much of a pullback, but as long as we make a higher high above 1780, we're in an uptrend. So gold is still in an uptrend. It may not feel like it, but that's what an uptrend is. It's higher highs and higher lows. So as long as 1780 holds, gold remains in an uptrend, and I think that's very likely to hold.
Now, what are some signals you're looking for that we may be heading lower in both gold and silver?
I think we're due for a sharp bounce. I'm not really looking lower. I've been accumulating aggressively here and even taking on some trading positions. I can't wait to see today's commitment of traders report because it was starting to get pretty bullish in silver even last week. And then we've had, it's been down for, however many consecutive days. So I think the COT is going to be incredibly bullish. We're extremely oversold. Sentiment is down in the dumps. This is an environment where you could see a really quick bounce. So the question is going to be, if and when we get this bounce, is it a dead cat bounce where you come back and make a lower low? Or have we seen the worst of it? That question remains to be answered. But I think, we're more than likely very closer, much closer to a bottom than any kind of top. That's for sure.
Now, recently we have been seeing gold and silver fall along with the stock market. Do you see that correlation continuing, or will gold and silver disconnect from the stock market soon?
I see them moving in opposite directions. So over longer periods of time, gold and general equities have a very strong inverse correlation. And bull markets typically peak around a 1-to-1 ratio, Dow gold ratio. 1980, Dow dropped to 850, gold rose to 850. There's your 1-to-1 ratio. Something similar happened in the 30s. And I think we're going to see that again over in the years ahead, not in the very short term. But yeah, I think gold is going to outperform general equities by a wide margin. That could look a lot of different ways, depending on what happens to the currency. In a runaway inflation environment, you could see stocks continue to move higher, just gold moves up faster. Or, stocks could pull back and gold rises and they meet in the middle. I'm not sure how that ratio looks, but I'm looking for that ratio to compress.
And when it comes to what is happening in the stock market, I know that I'm assuming the Fed is keenly interested in that. Your perspective on what the Fed might do soon, because it seems like we are seeing a continued drop in the stock market, lower highs and lower lows.
Yep, I think the Fed is trapped, but I do think they're going to reverse. I'm very confident that's going to happen. But I think they kind of wanted to let some air out of this bubble, because by letting the stock, asset prices correct, not just stocks, but real estate, things like that, bonds, it kind of it puts disinflationary pressures on the economy, so they can say, hey, look, inflation is coming down. Our policies are working. So I think they're content to a little bit let some air out of this bubble, but at the same time, they don't want to crash on their hands either. So I think they're going to reverse course probably in the next few months. September, October, November would be a good time frame for that to happen.
Now, do you see the stock market rallying on that, or will it continue lower?
Stocks and the metals the markets are forward looking. So I think before you hear about any kind of Fed pivot, the markets are going to recognize that ahead of time, specifically bonds and the metals. And then usually the stock market's the last to wake up. But I think all of them will probably, reverse higher, including general equities. I think we're due for a bounce here. And I think the markets will anticipate that Fed pivot.
If you look at real interest rates, that really gives you a perspective on what precious metals may do, because real interest rates are incredibly negatively correlated with gold in particular. We are seeing rates rise and inflation level off. So do you see that putting any more pressure on the precious metals, or do you see that changing soon?
Real rates are still negative, but they've been trending higher, and the metals have responded accordingly, just like you said. They've pulled back in accordance with those rising real rates, but they're still negative. And I don't think it's possible. Well, shouldn't say possible, but it's highly, highly unlikely that we get positive real rates anytime soon. If we did, that's a sell signal for the metals, but I think that's highly unlikely, because inflation's still north of 8%, and the 10-year is still at 3%. So that's, if you use that metric, there's different ways to measure it. That's still negative real rates of 5%, which is, that's a tailwind for the metals. Could that gap narrow a little bit? Yeah, it could over the short term, but I don't think we're going to get to positive real rates anytime soon.
When it comes to other markets, we also look at, for example, with platinum, we're seeing kind of not as much of a pullback in that than for gold and silver. What is your perspective on where platinum is right now?
Yeah, I love platinum right now. Platinum's pulled back to some key support right around $900. It's since bounced, but $900 is key support in platinum. Below there, you've got about $750 as long-term support. And I accumulate a little bit of platinum each month, and I'm happy to do so near these levels. Anything below $1,000 platinum, I think, is a gift if you've got a longer-term time horizon. But you mentioned other markets, not to go on a tangent, but to sum things up, interest rates are extremely overbought. The 10-year is extremely overbought on the yield, up against major resistance around 3.2% on the yield. The dollar is extremely overbought against 104 resistance. So I think it's highly likely over the short term we see a reversal in those two things, those two assets. Meanwhile, silver miners are extremely oversold against support. So I think we're likely to see what's happened in the last few weeks kind of unwind here. But the question is, is that a dead cat bounce, or is it a trend reversal? So that's the big question we'll have to watch for the next week or two.
And what are some of the indications that will tell you that it is a dead cat bounce or it is that trend reversal?
Reclaiming the 200-day moving average in gold, silver, and some of the mining stock ETFs. That would be a big indication that we've seen a trend reversal. The lows are in. Getting back above that 200-day will be the first step towards a technical reversal.
And as for uranium, I know at thesilverchartist.com, you do talk quite a bit about uranium. And it is amazing the movements we've seen in uranium in the last couple of years. But recently, in the last couple of weeks, what have we been seeing?
Yeah, you're almost like you said, almost everything is pulled back. Uranium miners have pulled back too. I've been content. I got in really early into that sector, so I've been content to just hold what I have. But I actually added this past week for the first time in quite a while. Some of these stocks, like Energy Fuels, for example, that's kind of a bellwether. That one was up around $11, just a couple months ago, and it fell back into the five. So it was down by 50%. And uranium, the actual metal, is above $50. So I think for those looking to accumulate uranium miners, this is a gift for those looking to accumulate. I think uranium is going a lot higher, and those mining stocks have a lot of upside potential.
All right. Well, Steve Penny, we really appreciate your time today. Before we let you go, where can our viewers find you? And did you have any last thoughts for our viewers?
No, I think we covered it. But you can find us at silverchartistliberty.com. That's a unique link for your listeners. It is an affiliate link. But we just put together a new website, a brand new app. We're building a really nice community of like-minded investors pursuing our goals alongside each other, sharing ideas in a nice, safe environment that's not owned by some third-party social media. We kind of created our own app, and it's a lot of fun. I would invite your listeners to come check it out. silverchartistliberty.com.
Fantastic. I think one of the most amazing thing about your platform is that people can actually see your trades in your portfolio. Can you share with us a little bit about that?
Yeah, exactly. I call it a fully transparent over-the-shoulder service with real-time alerts. So I show members exactly what I own. They see my exact portfolio, and whenever I buy or sell, I send out an alert in real time to everyone. So it's fully transparent. And I keep 90% of the portfolio in a longer term. I call it active investing. And 10%, I have a separate dedicated trading account where I send out trading alerts as well. And what's nice about that trading account is, you don't have to just kind of buy and hold and ride through this volatility. You can profit from this volatility. So, the trading, while the longer term account is red for the last few quarters, the trading account, you can make money in this environment. That one's green.